Joining us now to talk about this and what JPMorgan's earnings may mean for other banks coming out next week is David Konrad. He is the chief financial analyst at Keefe, Bruyette & Woods. And according to Bloomberg data, David is one of the most accurate analysts out there when it comes to JPMorgan, and that is why we call him a Bloomberg vest. David, thanks for joining us on this Friday.
Thanks for having me.
David, so JPMorgan, we mentioned this, posted a record profit in the fourth quarter, $4.83 billion, but $2 billion of that came from reserve reductions and loan loss reserve releases made up about 40+% of earnings for the year. So how much more do they have set aside in loan loss reserves? And what is the composition of their earnings for the full year going to look like in 2011? Are we continuing? Do you expect to continue to see their bottom line sort of boosted by these loan loss reserve releases?
Well, a couple points. They did have about 16 cents, 17 cents of their earnings benefited by reserve release. Our expectations was actually 17 cents for the quarter. So our estimate, including the 17 cents, was 90 cents. So they actually beat our number pretty handily on other core aspects of the business. If you look at, JPMorgan's really built a fortress balance sheet, not only the capital levels, but the reserve levels. We actually think we have several quarters more to go with reserve release with JPMorgan.
David, your forecast, the last one that I took a look at, in that you expect some substantial revenue growth in the first half of this year. Give me a description of as to what part of the business is going to actually be strong.
There's a couple aspects here. In this quarter is one of the first quarters in a while we saw strong growth in investment banking loans and commercial banking loans. So that will give us some lift going forward. We also think trading will hopefully normalize in the first quarter. Seasonally, first quarter is pretty strong for trading. So we'll get a lift there, partially offset by mortgage banking sort of waning with the spike in interest rates. But keep in mind, when you look at the revenue over this past year, we've had a lot of regulatory costs negatively impact a lot of JPMorgan's earnings. Reg E, the Card Act, that's all the way through the numbers now, so we can start looking at core growth going forward, and we won't have that headwind anymore.
Well, when you talk about those particular headwinds, that may fall under the bigger umbrella of JPMorgan's legal costs. I mean, outside of the two that you mentioned, we also have Lehman, still it's bankrupt, but it is suing for $8.5 billion, $8.6 billion to be exact, in collateral it says was wrongly seized by JPMorgan. They're also looking for tens of billions in damages. We also have the Madoff trustee, Irving Picard, looking for about $6.5 billion. Just a couple more examples. How does that factor into your estimates?
Well, we certainly think litigation costs will continue. That's one reason why we saw heavier expenses this quarter. But, we also have to look at the merits of a lot of these cases. And although it being a big headwind on the headline stamp front, we actually don't think bottom line it's going to be that impactful going forward.
All right, let's talk about what this means for Goldman and Citigroup. You cover both of those stocks. They're out Wednesday and Thursday of next week. And are you changing your earnings estimates here with JPMorgan beating what you had expected?
Well, we could take one of them at a time. In terms of Goldman Sachs, along with JPMorgan, we lowered the numbers going into the quarter, anticipating lower trading revenues, primarily FICC trading, sovereign credit that happened during the quarter, also the spike in rates, caused a little bit lower trading volume in that respect. And in fact, JPMorgan modestly beat my number there. So we think that's a modest positive for Goldman Sachs coming in the quarter. Also for JPM, investment banking fees were very strong. We'd anticipate them even being stronger for Goldman Sachs. So moderately, we feel a little bit better for Goldman going the quarter. Citi, on the other hand, we're a little bit more cautious, actually, following the JPMorgan news. Although we had a lot of credit leverage overall, we also, JPMorgan took marks on the credit impaired portfolio for Washington Mutual. In many ways, you can think of that as a Citi Holdings portfolio at Citicorp. So some of the stressed loan portfolios, we still had elevated credit costs. That may hold back the Citi results this quarter. In addition, our analysis shows Citi lost market share in the investment bank during the quarter. So we don't expect the growth, the linked quarter growth we had in JPMorgan and Citi in that respect.
Hey, David, last question for you. Getting back just to JPMorgan, the stock is up more than 7.5% so far just in January, year to date. You've got a price target of $57 on JPMorgan. Are you planning on revising that upwards at this point?
Well, they beat our number pretty handily, so we're going to be doing our estimates tonight. But it feels like there's an upward bias in our estimates. And you think about JPMorgan, the sum of the parts of their business. I think an 11.8, 11.7 multiple is fair for the business. So, we think that 57 is a pretty conservative number.
All right. Thanks so much, David. Have a great weekend. Thanks for joining us. That's David Konrad. He's the Chief Financial Analyst for Keefe, Bruyette & Woods.